Okay, good morning. Brian? Yes. Okay, today we are going to be talking about Chapter 11. You'll be watching the Chapter 11 videos this Sunday to get a little bit more detail. So we'll go over some major points today. First of all, starting with what's due this weekend, Saturday, we have attendance quiz 22. We have the Chapter 10 homework, so we would have finished that. We did that in class last Thursday, and the attendance quiz covers many of the questions from Tuesday. And then Sunday we have video quiz 23, which covers chapters 11 and 12 in Blackboard video. So 11's in there, and then 12 is in there. I wanted to talk a little bit about the final exam today. First of all, the final exam is finals week, and it is due by 6 p.m. on Thursday, May 8th. So you have to be seated. If you're taking it in the computer lab, you have to be seated by 4 p.m. on Thursday. If you're taking it via ProctorU, you have to schedule by 4 p.m. It covers chapters 8 through 13. Again, study plan is set up for the learning objectives you need. It is similar in length and format as our other exams, so nothing's changed. The rules are still the same, the one piece of paper front and back. If you need present value tables, they'll be provided for you within the exam as a pop-up, so you don't have to bring anything with you like table-wise. So that's like the basic information about the final exam. Now coming up is the a 12-point bonus opportunity for the final. So I'm telling you about it right now. There is one opportunity to have 12 extra points added to your exam. So if you would score 88 on the final, if you do what this is, you would get 100 on the final. That would be your 12 points would be added. So what do you have to do to earn the 12 points? Well, you know, last exam there was a huge line on Thursday. There was a line of like 3 hours. People got shut out and all that. So for the final exam, if you complete it Sunday, May 4th, you will get the 12 points. So this is what you have to do. I'm telling you now, finals week is 2 or 3 weeks away. So you can look at your calendar and plan. They are opening the Proctor Lab for us on Sunday morning. It is only exclusively for the use of my classes from 8 a.m. to noon. So it's just us, and I will be there proctoring. Brian will be there proctoring. We'll be covering the whole day, and then there's 2 other proctors there. So if you show up Sunday morning at 8 a.m., we have 72 computers there. We can get you signed in. You could take the exam, and it's a matter of planning. So if you do this, and you complete your exam by 6 p.m. Sunday, I will be adding 12 points to your exam score at 6 p.m. Sunday night. It will not, so when you submit your exam, it won't show the 12 points. I will be adding them Sunday at 6 p.m. So some other things then. So all you have to do for the 12 points, complete it Sunday right before finals exam week starts. The Proctor Lab will be open from 8 a.m. to 6 p.m. It is for our exclusive use from 8 to noon, and then other classes can have exams starting at noon. So we've got 4 hours that is exclusively ours. If you're registered with SAS, contact me via email. And do that as soon as possible. If you're registered with SAS, I need to hear from you within a week, which would be by April 23rd. So there's no exceptions. Do not contact me and say, my family's having a picnic Sunday, May 4th. Can I take it Monday? No. This is your one and only opportunity. I have done this in the past. I have never added as many as 12 points. In the past, I think I've gone up to 10 points, and I've had half the class take it Sunday. We have not had a wait line on Sunday of more than 5 or 10 minutes, but it's been full and steady the whole day. I think 12 points is going to push us up. So I would say if this were me, I would be coming in at 8 a.m. I will be happy to greet you at 8 a.m. and get you set up. And that's if you're taking it via ProctorU, you will be able to schedule it. They will schedule you, and you can take it via ProctorU and still get the bonus. It doesn't matter if you're taking it in the computer lab Sunday or on ProctorU Sunday, you still get the 12 points. The lab, as I said, is open from 8 a.m. to 6 p.m. It is only open for our class from 8 a.m. to noon, okay? Because Brian and I are going into Proctor from 8 a.m. to noon. Okay, that's why it's open for us, because we're doing this so that you have adequate time. You can get in there, get your exam done, and not have to worry about lines later in the week. The lab is going to be busy in the week, and there's no way to predict during finals week when that busyness will be. So your best bet is to plan to take this exam Sunday, May 4th. This is 12 points you get simply for showing up. And okay, I would not plan on, I'm just reading the thing here. I would not plan on a curve. I have not curved the final exam in the past and will not, absolutely do not bank on it. It is what it is. You get the 12 points if you show up. Do not plan on a curve. Okay. The lab is open from 8 a.m. to 6 p.m. You can go anytime in that time frame. You have to be sitting down by 4 p.m. on Sunday to start your final. If you show up at 4:01, they will not let you start the exam. You have to start by 4 p.m. You have to start your exam by 4 p.m. regardless to get the 12-point bonus. You have to submit. Let's say you are in ProctorU, and ProctorU will let you start anytime. ProctorU will let you start at 5 p.m. if you want. ProctorU will let you start at 5:55 p.m. They don't care because they're open 24 hours a day. You have to submit your exam by 6 p.m. If you submit your exam at 6:01, you're not getting the bonus. Okay, so just plan on starting your exam by 4 p.m. But you can take it any time between 8 a.m. and 6 p.m. on Sunday, starting by 4 p.m. To get that bonus. And again, the 8 a.m. to noon is our exclusive time in the lab where you have the best chance of not waiting. And we generally get there early. I get there early, but I have to wait for the lab proctor to get there to open the door. So hopefully they'll be there early, but we will be ready. We could take 72 people right at 8 a.m. and then people just roll through that. Okay, and this is the one opportunity. Again, do not email me and tell me you've got an event going on Sunday. This is not a right. This is an opportunity, and it's our way to try to move some of those exams out of the busy time. So this is kind of win-win for you. You get 12 points, and you don't have to wait in line. You have to start your exam by 4 p.m. Sunday. Again, if you're taking it with ProctorU, they don't care what time you start because they're open 24 hours a day. You have to start it by 4 p.m. if you're going to get the bonus. Okay, and let's see what else. I think I have one more thing up here. Okay, and again, if you submit even 1 minute after 6 p.m., you will not get the 12-point bonus. So this is where you've got to submit because at 6 p.m. I will physically be at my computer adding those 12 points on. So if you submit at 6:01, you've missed the cutoff. So get in there. If you're in the lab, it's not a problem. In the lab, they're not going to let you start if it's after 4 p.m. You have 120 minutes on your exam. So you're going to be submitted by 6 p.m. automatically. I guess the danger is ProctorU because you don't have to start your exam by 4 p.m. with ProctorU. You have to submit by 6 p.m. All these times, by the way, are in Eastern Standard Time. Okay? Okay, any questions from people about this? How many people think they might take it Sunday? Yeah, great. Lots of hands going up. Okay. Yeah. So we've got a lot online. So yeah, this is a great opportunity. 12 points is a lot. You could go from 88 to 100. This is a big deal. And you know about it now, so you can plan accordingly. You can look at your final exam schedule, put ours first on that list to do, get ours done Sunday morning, and then you've got the rest of the week to worry about your other exams. You don't have to take it Sunday, but I would strongly encourage you to rearrange your schedule so that Sunday works out, because that 12 points is really, really helpful. But you have to study for it. Don't take it if you're not ready for it, but you do need to prepare for it. But assume you rearrange things, it's just a good opportunity for the 12 points. Okay, and I would expect that at least half the class will take it Sunday. I've never offered 12 points. This is a lot, so I would assume that I'll get even more than half. And that's wonderful. Like I said, Brian and I will be there proctoring Sunday. Do know that when we proctor, we can't answer exam questions. We are there as proctors. We'll smile at you, but we're not going to answer exam questions. So we're just like any other proctor in that respect. Okay. Okay, so we'll move on. So there's the final exam, and I will tell you right now, you're going to hear about the final exam every day now for the rest of the class. We have 4 more classes after today. You'll hear about the final exam each of those days, just because I want to make sure everyone knows about it. Okay, so Chapter 11. Chapter 11. So we're getting down to the end. We have 5 class days, including today. We're doing Chapter 11 today. You'll do some more detail in the videos this weekend for Chapter 11, and then we'll start Chapter 12 next week, and then the last week we'll do Chapter 13. So Chapter 11 is about a hodgepodge of things, kind of. The first thing, we have 3 learning objectives in this chapter only. The chapter has at least 6 learning objectives. We are only covering 3. Okay, so the 3 learning objectives we're covering in this chapter, first of all, quality of earnings. Quality of earnings says, do we expect these earnings to continue? We have earnings per share, and then we have learning objective 6, management versus auditor responsibilities. I was like, I missed that. It took me that long to get it. Yeah, it took me a while. Chapter 11. Yes, and Brian made a joke. It took a while for me to get it. I thought, where's bankruptcy in this chapter? Chapter 11, bankruptcy file. Okay, got it. Okay, learning quality of earnings. Learning objective 1 relates to how likely those earnings are to continue. If we have a high net income, but it's because we had a correction of an error from a prior period, that's not considered high quality of earnings. If we have a high net income due to a one-time adjustment, that's not. So quality of earnings is kind of talks about how likely our earnings are to continue. Earnings per share is one of the most widely quoted numbers you see in the financial press. Earnings per share is basically taking our net income and dividing by the number of common shares outstanding to find out what we earned on a per share basis. It's a way to compare companies to companies. By the way, earnings per share is very, very, companies will set forecasts of what their earnings per share will be. So they'll say our earnings per share will be $1.21 for the first quarter. So they'll forecast it. The analysts will have these forecasts. And then if the company misses it, even misses it by a couple pennies, it's a big deal. Because there's millions of shares. So earnings per share is a very, very important number, and we'll talk about that some. And then learning objective 6 talks about who's responsible for the financial statements and for internal control and all those things. We have management on one side of the company, and we have the auditors, the external auditors that come in and check everything. So we talk about the difference between those two. So earnings per share, I'm just going to hit on a couple of high points here, and I've got a couple lecture slides embedded in here. The first one is earnings per share. So you'll see the video about quality of earnings, but now we're going to talk about earnings per share. There we go. And there is a formula for earnings per share. I would definitely have that on my reference sheet, and it's going to appear here in a minute. Earnings per share is our net income minus preferred dividends divided by the average number of common shares outstanding. I'm going to pause for a minute, let you write that down, and then we'll talk about it. What this is saying, so in this formula, what we're doing is we're taking our net income, we're subtracting out the preferred dividends. The reason we're subtracting out the preferred dividends is because we want to look at the net income that's available to common shareholders. Earnings per share is all about how much per share the common shareholders get. So we take the net income, we subtract what we have to pay the preferred stockholders, so that's the numerator, and then we'll divide by the average number of common shares outstanding. Average number of common shares, let's say we started the year with 1,000 and we ended the year with 2,000 shares. So our average number of shares is going to be 1,500. We'll take the average of the beginning and the end. So we'll see that later, if not this chapter, in chapter 13. But earnings per share is just how much net income is available to the common shareholder, how much that is on a per share basis. Then we have, if you're an accounting major or you're taking Corp 1 for another reason, you will get much more in depth in earnings per share. Earnings per share, there's a basic earnings per share, and then there's diluted earnings per share, which gets into more detail. And then when we make major adjustments, if we have to do an error correction or we have extraordinary items, we do those on an earnings per share basis to kind of put it in per share terms. So earnings per share, that's the basic calculation. And I think we are going to do a problem on that. Yes, we are going to calculate earnings per share right now. So we'll do a homework problem where we're doing earnings per share. Okay, so first off, what we're given is we're given a table that has basic information in it. So we have preferred stock, $20 par value, 2%, 11,000 shares issued, common stock, treasury stock. I'm going to pause for a minute. I see a lot of people writing down, so I'm going to just go quiet, let you take what notes you need, and then I'm going to talk about each of those numbers before we actually do the problem. This table, preferred stock, the table, I'm going to be using it heavily as I explain how to do this. So if you don't have the book, you need to have that little table written down, because the solution is not going to make sense without it. And you're done? Okay. What we have, the table then, is an excerpt from our balance sheet. Remember, the balance sheet starts with assets, then goes to liabilities, then has equity, stockholders' equity. And these are some items on our stockholders' equity. So the first line, preferred stock, that says we have these preferred stock shares, $20 par value, 2% is what they pay, 2% of the par value, and 11,000 shares are issued. So there's the balance of that one. Common stock, $2.50 par valued, 1,100,000 shares issued, and it gives us the total for that. And then treasury stock, common treasury stock, tells us 120,000 shares valued at cost. And then during the year they earn net income of $6,200,000. So they want us to calculate the earnings per common share. What we're going to do with this is, first of all, first thing I do when I see compute earnings per share is I write the formula down. Okay? We just had that formula, but I write it down and I'm leaving plenty of room so I can write numbers around there so that I don't lose track of what I'm doing. So first thing, net income. Net income is the easiest number to get. Net income is going to be $6,200,000 because they gave that to us. So we know that that's $6,200,000. Once you write the formula down, you can start filling in numbers. So it's identifying the formula. Here's our formula. So then the next number given is preferred dividends. So preferred dividends, we know preferred dividends are going to be 2% of the $20 par value times the number of shares. So what we're going to see with that, so we're going to be looking at the preferred stock line. Okay, $20 par value, 2%, 11,000 shares issued. So what we will see in terms of a calculation for preferred dividends is going to be that $20 par value times 2% times 11,000 shares. So we get 4,400 as our preferred dividends. Now we have for our numerator $6,200,000 minus the 4,400 of preferred dividends. The bottom number, average number of common shares outstanding. Average number of common shares outstanding. What I most often see here is that we grab the 1,100,000 because we're only given one number. And that's true. We don't have a beginning of the year, we don't have an end of year, so we don't have to do that. But we have common shares, but notice that it's average number of common shares outstanding. So what that means is we have to look at the treasury stock also. Remember, treasury stock reduces our outstanding. So if we take the 1,100,000 shares that are issued and we subtract the treasury stock of 120,000 shares, we're going to get outstanding shares of 980,000. So now we've got all the numbers we need for our earnings per share calculations. So we take the 6,200,000, subtract 4,400, divide by 980,000 shares. Again, outstanding common shares, we have to take our common stock shares issued and subtract the treasury stock, because remember, treasury stock is our own stock that we're purchasing back. So then when we do the math there, we get $6.32, which is rounded, and that would be our earnings per share. Earnings per share is typically carried out to 2 decimal places at least. So you would not round this to $6. You're going to have $6.32. When you do this problem is on your homework, do pay attention to the rounding rules. We use the 5-4 rounding rule for the cents. And I believe my accounting lab asks for 2 decimal places just like this one as well. That's a very basic earnings per share question, and that's the general idea behind earnings per share. So that one is on the Chapter 11 homework. Now we have a couple questions that you'll try out. So I have a couple questions that are probably a little bit easier than this one, but you can still use that one as a guide. So we've got a couple questions. They're kind of long, so I'm going to give some time to write them out. The first one's coming up here. We're given information about the net income for Wildcat Corporation, and they had 5,000 shares of $100 par value, 10% preferred stock, and 40,000 shares of common stock outstanding. And so then you have to calculate the earnings per share. So I'm going to go quiet for a few minutes, let you write this down, and then I'll be around to see what answer you come up with. You should be okay on this one, I think. Scheduling your file there?
Yeah.
There you go. Good. Yeah, yeah. Cheers. Okay, yeah. Not too bad, huh? Yep. You have a number yet? No, okay. Looking to see how far we are. Do you have it yet? Okay. Working on it. Does this make sense?
Yeah, I'm not sure for the average number.
Well, the average number, if you're listening online, the question was how to get the average number of shares. And it tells us that 40,000 shares were outstanding for the entire year.
Okay.
So that's the average,
okay.
40,000 shares. The question, I just got a question from someone about what the average common shares outstanding were, and it tells us that we had 40,000 shares of common stock outstanding for the entire year. So that means that we did, the average number of shares is 40,000. If that's what was outstanding for the whole year, that's the average too. What percentage online do you have answered? Okay, then okay. I was just gauging timing. I'm looking to see if people are done. Yeah, you're good. That's not it. Look at it. What? Well, no, I'm still looking here. Are you good on this? You're good. Okay. Yeah, you're there. Okay. I see you moved back from me here. Good. Great. Are we done over here? You guys good? See? Okay, the answer is C, and I was seeing a lot of C's. If you didn't get it, we're going to show the formula here. What you do is you take your net income on the numerator and subtract your preferred dividends, which are 5,000 shares times 100 times 10%. So you subtract that. I think that's 50,000, right? Yeah, 50,000. So you take 700,000 minus 50,000, divide by 40,000 shares, and you get $16.25. The next question that we're doing, it's again a kind of long one that I'm putting up. And this next question is asking, the bottom line on the next question, it's asking you for the numerator in that equation. So that's what it's asking. So this question, again, we'll go quiet for a couple minutes, let you write it down. I think this is the last of the long questions for today. It gives us a net income and outstanding shares, par value of non-preferred stock, etc. And you're looking, again, they're asking for only the numerator of the earnings per share equation. And that's what I got too. Make sense on this one? Yep. Good. Yep. You good on this one? Or you know what you're doing? No. No. On this one, on the numerator, just to remind you, the numerator is your net income and subtract your preferred dividends. Preferred dividends, you can usually identify those by the one that has the percentage on it. What we do on this one then is you'll take the 420,000, subtract the preferred dividend, which is the 4,500 shares times $100 par value times 15%. So you end up with $352,500 as the answer, C. One more, and this one's really quick. You should be able to just read this and know it because we just talked about it several times. So this next one is asking about the earnings per share calculation, what you do with preferred dividends. When calculating earnings per share, preferred dividends are what? So read through there, select the answer. You should know this just based on that formula that we have. Good. Okay, the answer here, online we had a bunch of D's, and that is what is right. So we subtract preferred dividends from net income in the numerator to calculate earnings per share. Again, that's a good reason for having that formula on your exam reference sheet so you can answer questions like this pretty easily. We're going to leave earnings per share now. So we're leaving the calculations behind for the rest of today, and we're going to move on to management versus auditor responsibility. And we're going to do a homework problem, but before we get there, we've got to do some basic discussion of this. Now, management's responsibility, see hands raised. So you know what, I'm just going to wait while I see people writing it down, and then I'll talk about it once I see people done writing. Management responsibility. Management is the CEO of the company, the managers of the company, the upper management. Basically, management's responsible for internal control. They're responsible for financial reporting. They cannot say, we didn't understand it. That's what happened with Enron. When Enron imploded, it's been several years ago, but when Enron imploded and went belly up, they went after management of Enron. And the CEO's defense was he wasn't responsible for it because he didn't understand accounting, so it had to be the outside auditor. At that point, everyone assumed that management was responsible for it, but it wasn't explicitly stated by law. Now it is. Sarbanes-Oxley says management is responsible. As a CEO, as a member of upper management, you are responsible for these financial statements. So that's one of the big reasons you take a class like this. If you aspire to be a manager someday and your company is issuing financial statements, you are responsible. You cannot say, oh, that's the accountants, I pay them to do it. You have to understand it. You are responsible for it. You can go to jail if there's things wrong with it. So you want to make sure that you can understand it. So management is ultimately responsible. So management issues the report on internal control over financial reporting, says we're responsible. It states that management has examined the internal controls and they found them to be effective. And then these internal controls were audited by outside auditors. So someone outside the company, an independent third party, has gone in to confirm this. Okay, so then on the other hand, we have the auditors. So the auditors are the external accountants, and they go in and they're going to be looking at the financial statements. These are CPA, Certified Public Accountants, and this slide's coming up, and again, I'll go quiet while you write it down. Okay, so go quiet for a few minutes. Auditors are CPAs, Certified Public Accountants, and they are independent, meaning they don't have any financial gain at stake from the company other than getting their fee paid. So they don't own part of the company, they aren't friends with management of the company, etc. And the auditors come in and they determine if the statements comply with generally accepted accounting principles. They also make sure the internal controls meet standards. And they issue this report on the financial statements and internal controls. The auditors are not responsible for the system of internal controls, nor are they responsible for the financial statements. They are responsible for reporting on them and giving an opinion. The audit adds credibility to financial statements. If we did not have auditors, if we did not have an independent third party going in and looking at the financial statements as a public, our whole system of investing in companies would crumble, because you would be relying on companies to tell the truth. And there would be no checks and balances on the company to make sure what they were reporting was indeed conforms to generally accepted accounting principles. So auditors have a very, very important function in society to make sure that we can trade stock, because we have somebody looking at the books for us, because we can't go in ourselves and look at Amazon's books before we decide to invest in them, for example. What we're going to do now, okay, if you do not have the book in front of you, you are not going to be able to write this whole thing. Absolutely not. This problem is on the homework. What I would suggest is this is a talkie problem, and I'm going to be showing you where to find the answers in this problem. So what I would suggest is that later on when you're doing this homework, go ahead and try it, see if you can do it from memory. But if not, you can come back to the recording and go and pause it and keep going back and forth. You are not going to be able to write this down, guaranteed. There's way too much. This, what you see on the screen, is basically excerpts from the reports on the statements. The thing that I have highlighted in yellow is an excerpt from management's annual report on internal control over financial reporting. And then on this next slide, it shows you the rest of the writing for this problem. So we have this right here, and we have this next slide. So we have 7 questions to answer, and we're given management's annual report, and on the next slide, we're given the auditor's report as well. So this is an auditor's report, and this is, notice it's addressed to the board of directors, and typically in an audit report there's 3 paragraphs, 2 or 3 paragraphs, and they are very much boilerplate language. Like you can memorize what they say because each one's going to say the same thing. And you're looking for an opinion that says these statements present fairly is what you're looking for. So this is the auditor's report. It's published with the statements. And so what we're going to be doing on this one, again, you're not going to be able to write it down, but we'll talk through it and I'll show you where you get the answers. Because when you do this homework, some of it you'll just know and others you'll have to look for it. So the first question, who is responsible for the financial statements? Okay, for Westminster's financial statements. So what we do is actually we'll be looking in the, you can look in the, if you know that, we know that it's management, right? Management is responsible, but if you want to point to where it is in one of the excerpts they've given us, if you look at the auditor's report, there is a line in the auditor's report that says, these consolidated financial statements are the responsibility of company's management. So we know that, I mean, that one should be a gimme. The management is responsible for the financial statements no matter what. We don't even have to find that in one of these letters to know that. Then the next question down, by what accounting standards are the financial statements prepared? Well, to get this answer, again, we go to the auditor's report. And the auditors, because we have the management's responsibility on this page, and now I'm going to flip over to the other page. And the auditor's report, when we look at the auditor's report, down towards the bottom of it, it says, the last part of the sentence I've circled, in conformity with accounting principles generally accepted in the United States of America. That's generally accepted accounting principles. That's GAAP. Even though they don't say GAAP, it's accounting principles generally accepted in the United States. So that's where they're telling us in the auditor's report how these statements are prepared with what standards. The next question down. The next question down is question 3, and identify one concrete action that Westminster Management takes to fulfill its responsibility for the reliability of the company's financial information. Well, this one is given in the excerpt right above here. If we look at that, it says the concrete actions they take is establishing and maintaining adequate control over financial reporting. So again, when we're talking about looking for a concrete action that Westminster Management takes to fulfill its responsibility for reliability of the statements, they establish and maintain adequate control over financial reporting. Okay, so that's question 3. So moving down, which entity, question 4, which entity gave an outside independent opinion on the Westminster financial statements? Where was this entity located and when did it release its opinion to the public? So this is just saying, who did the audit? Well, to figure out who did the audit, it would make sense that you would look at the audit letter. So let's go on. So we're looking for which entity, where was it located, and when did it release its opinion to the public. So we look at the auditor's letter, look down at the bottom of the auditor's letter, it'll tell you the name of the firm. The name of the firm in this case is SLMA, LLP. LLP is Limited Liability Partnership. So the name of the firm is SLMA. That's the name of the firm. So the answer to what entity did this, it was SLMA. And then where was it located? It was located in Aurora, Colorado. And then the date that this was released to the public was December 28, 2012. So you find all that information on the auditor's report, which makes sense. You would look at the auditor's report to figure out who did it and what the date was and where they're located. Then we move on to the next question. And the next question says, question 5 tells us exactly what did the audit cover? Give names and dates. Okay, so what did the audit cover? Give names and dates. That's something, again, that we're going to head back to that auditor's report for. And the auditor's report, when we look at the auditor's report, it will give us a paragraph answering this question. And the paragraph, it says, we've audited the accompanying consolidated balance sheets and subsidiaries as of September 30th, 2012, September 30th, 2011, and related statements of operation. Remember, a statement of operation is an income statement, shareholders' equity, and cash flows for each of the 3 years in the 3-year period. Okay, so that just answered exactly what did the audit cover, give names and dates. Those are the names of the statements and those are the dates. So you're looking at the first paragraph of the auditor's report when you're looking for what did it cover and what dates did it cover. And that will be the case in every auditor's report. And we have question 6 coming up that we're actually going to come back to this auditor's report for too. But question 6 says, by what standards did the auditor conduct the audit? So by what standards did the auditor conduct the audit? And again, we go back to that same auditor's opinion letter, and it's going to give us one little tiny paragraph right smack in the middle of it telling us what standards the auditor used when doing the audit. There are standards for audit about what they examine, etc. They tell us here that we conducted our audits in accordance with the standards of the PCAOB, is how it's commonly referred to, Public Company Accounting Oversight Board. PCAOB is the common acronym. And for our last question, we're going to end up back here too. And that last question that they ask us is, what was the auditor's opinion of Westminster's financial statements. So the last question, what was the auditor's opinion of these financial statements? Okay, what was the auditor's opinion of these financial statements? To get the auditor's opinion, you would go to that auditor's report again. So far we've looked at the first paragraph. The first paragraph was what they audited and the dates. The second paragraph was the audit standards. And now this third paragraph is the opinion of the auditor. And this opinion, it says, in our opinion, the consolidated financial statements referred to above present fairly in all material respects. That's very, very much boilerplate language. That's what every one of these is going to say until they revise these letters occasionally. But what they're doing, notice that they're not guaranteeing that these are correct. They're not saying, we guarantee that these statements are right. They're saying that these statements present fairly in all material respects in these date forms in conformity with GAAP. So they're saying these statements present fairly. It is not a guarantee. Things can still go wrong, but this is they have looked at it in accordance with standards that exist, and in their best estimation, this statement does present fairly. And this is referred to as a clean opinion. Also, when this was done, it's also referred to as, believe it or not, an unqualified opinion. And you would think an unqualified opinion means that somebody doesn't know what they're doing. An unqualified opinion means that they're not qualifying it for any issues. So when this statement was written and when the book was written, an unqualified opinion was what you wanted. That was a clean opinion. That was the best opinion you could get, is an unqualified opinion. It has been that way for 40 years because I remember when I was in school, it just felt weird to say this is an unqualified opinion because that meant it sounded like they didn't know what they were talking about. Just recently in the last year, they have taken away that term unqualified. It's still in your book. We'll still go with it, but now we're no longer using that term. So you'll probably still be tested on the CPA exam, but it's coming out of, finally. I think that was the stupidest term they ever came up with. I think clean opinion. So, okay. Okay, questions? Okay, well then what we're going to do right now is we are going to be done with class, okay? So what's due this weekend, attendance quiz. It can cover Tuesday this week, possibly Thursday last week, but I think mainly Tuesday this week. Chapter 10 homework. Remember, the homework problems for Chapter 10 were Thursday last week and embedded in the videos for Chapter 10. So have a nice weekend, and I will see you Tuesday next week.